Hello and welcome into the KE Report. I'm your host, Shad Markwitz, and today we're getting an update from Jordan Roy-Byrne, founder and editor of The Daily Gold. And we'll put a link to The Daily Gold so you can follow along with Jordan's work at the bottom of this editorial. And Jordan, great to get you back on the show just to get an update on how you're looking at things. I'm excited to talk to you on this one because we've been talking, it seems like forever, about looking for the divergence between the U.S. stock market, if it was to start rolling over and correct, and precious metals to start getting a bid. That hasn't always been the case in the past. There's times where everything got hit at the same time. There's times where the precious metals were doing good, but so was the stock market. Over the last couple of weeks, and really for most of this year, we've seen a divergence finally where gold, even silver, and the precious metal stocks have been outperforming U.S. equities. U.S. equities have really been in the red and in the hurt locker the last couple of weeks, but there's still a bid going into the, I guess, for a safe haven into precious metals. So I'm curious, Jordan, to get your thoughts on this because you've been looking at this ratio between and the intermarket analysis between U.S. equities and gold for a while now.
Yeah, well, quite simply, we have gold breaking out against the S&P. It's breaking out of a 4-year long base, or you could look at it the other way, where if you look at a chart of the stock market against gold, that is breaking down from a 4-year base. And this has only happened 3 other times in the last 100 years. We have a significant breakout in favor of gold, relative to the stock market. Gold against the 60/40 portfolio. I do track that on a monthly basis, but looking at daily and weekly charts show that it has broken out. It's retested the breakout. Now it's pulling away to the upside. So even though we're early in we're in the middle of the week now and we're in the middle of the month, I guess there's still time these things could reverse, but I don't expect that to happen. I mean, it's a clear breakout for precious metals. And it's probably way too early to say this is going to be a complete divergence if the stock market is to go into a real bear market. But I do expect that. I do think that if the stock market is going into a real bear market, that you will see precious metals diverge and move higher. And the two main reasons for that, first, if you look historically, you've had these divergences where you had a bear market, but precious metals went up. You have 73 to 74. And then you had 2001 to 2002. And those were points where they were around the beginning of a new secular bull market with respect to gold. And there was not much capital in precious metals at the time because you were at the end of a secular bull market in stocks. And so and at the same time, if you look at gold against the 60/40, those were the points where you had the huge move up in favor of gold. So historically, when there's a transition between most of the capital going into the stock market, and then that secular bull ends and the secular bear ends in precious metals, there has to be some kind of divergence like that for that change to happen. And so that's confirmed or shown by gold breaking out against the 60/40. So that's what we have again, gold against the 60/40 breaking out of a 10-year base. And there's not a lot of money in precious metals. So if we do have a real bear market in U.S. stocks, I expect precious metals will move higher at the same time. I mean, if you look at 73 to 74, '01 to '02, there are corrections for precious metals during those points. It's not a situation where they'll move up every day and the market will move down every day. But the bigger picture is that the primary trend is up in precious metals and down in the stock market during these points in time. So again, I'm not sure if the stock market is going to have one more rebound before it enters a real bear market. But either way, it's definitely peaked in real terms. It's definitely peaked against gold. So that's really the major development. And that confirms a new bull market in precious metals. And when these breakouts happen in favor of precious metals, I mean, they ran for almost another decade. So it's fair to say we're still at the beginning part of a real secular bull market in precious metals. So that's the significance of the last week or two in these moves.
Do you think it's still too early to know? I mean, you kind of indicated that, they could still go back and retest, but it's been such a stark contrast because the other thing that's been pulling back is Bitcoin. Bitcoin kind of trades like a tech stock. It started crashing along with the Nasdaq. And there's somebody that put up some charts, some heat maps that showed really a lot of sectors are losing funds, but precious metals are gaining them. Is it enough of a signal already just to tell you that the money rotation is happening?
I think it is based on the charts and the degree of the breakouts that we're seeing. I mean, they've definitely happened on daily and weekly charts, and so you would need to see some kind of massive reversal here in the next few weeks for it to be negated on the monthly. There will be some point, if the stock market has more of a correction, there will be a point where it rallies, has a good oversold bounce for a little while or perhaps longer, where some money could come out of precious metals at the same time. So you could get a snapback in favor of the stock market at some point, but they've already broken down and they've already peaked, by the way. These ratios peaked at the very end of 2021. So they peaked and now we're just getting confirmation that the trend has shifted. So yeah, I think it's happened, and I just don't see any evidence to argue against it at this point.
Well, and you brought up how long some of these bases were to finally break out. And we've talked about this before, Jordan, that people love to throw the term breakout out there, like, oh, it's a breakout, it's a breakout. But in this case, this is literally a long-term pattern where it's breaking above it. So maybe speak to the significance. You kind of already indicated that it could last for a long time, but the significance technically of a real breakout on these charts.
Yeah, the significance is the longer the bases that you break out from, then the longer the ensuing bull move or uptrend or breakout move will last. If you just think about, you could go back and look at the stock market breaking out from of a 13-year base in 2013. I mean, that's had a really good run for 11 years after that. You look at the stock market, of course, the Dow breaking out in 82, that, led to a really strong run for 5 years and then ultimately a 18-year long secular bull market. I mean, you had the same thing in the late 40s when the S&P broke out from a base, not quite to an all-time high yet, but that led to an incredible move for 8 years. The biggest breakout of all time was commodity prices in 1971, 72. They broke out from an 100-year base, basically going back to the 1920 peak in commodity prices and then the Civil War peak in the 1860s. So that led to spectacular move higher in commodity prices in the 1970s. And, we've seen gold break out of a 13-year cup and handle. So that's going to run for a number of years. And again, gold against the 60/40 portfolio, that's breaking out of a 10-year base now. So again, this is only the fourth type of move or breakout in favor of gold in the last 100 years. So that's extremely significant. And that tells us basically over the next decade, buy gold, buy precious metals, sell stocks. It doesn't mean it will be true for every month or every quarter, every few years, but the 30,000-foot view has now turned. And this was not in place a year ago, 2 years ago, 6 years ago at the 2018 or 2016 low. It was not in place. So this is completely different. And yeah, I mean, last thing on breakouts, I'm not a fan of trend lines in general, just because I don't find them to be that significant unless the market is touching or testing that trend. I mean, it's got to do it 5, 6, 7, 8 times for it to be really significant. Because the problem is what a lot of amateurs do is they look at a chart and then they just start drawing a line, trying to connect 2 or 3 points without really looking at the price action carefully and really identifying, okay, there's a clear trend here. They're kind of forcing a trend that doesn't exist. And Kai Hoffman made this point. I did an interview with him a couple of years ago, and I was talking about it. He said it's similar to how mining companies, they tell you they have a discovery, and so you think about, oh, we made a discovery. Well, how significant is it? I mean, we found a speck of gold here. That's not really significant. But if they tell you it's a discovery and they had some great hole where they hit 50 grams of gold over 26 meters, I mean that's in a new area. That's a real discovery. So people have to be careful with the breakout term. So I would just say, look, avoid trend lines. Just look at the flat horizontal lines, because that's when you get real breakouts. As I mentioned at the beginning of this answer, when you break out of these really long bases, they're significant. They have significant implications over the next years. And over a decade or two at least. So these are real breakouts in precious metals.
Yeah, I'm glad you clarified that, Jordan, because there are a lot of people that have 2 points of connection on a trend line, and they're saying, hey, this is a trend line, but it's not significant. And it's a great analogy with the discoveries from mining stocks. Like everything's a discovery, everything's a breakout, but the reality is there are significant times, and if you look at the horizontal support and resistance levels, and you look at the horizontal resistance over a 10-year period, and it finally pokes its head above it, that is significant. Now, we had you on last time in February, Jordan, and we were talking about your new book. Gold and silver, the greatest bull market has begun, a once in a lifetime investment opportunity. Now, just from that title and just from what we've been talking about, the fact that this is so rare to see this over the last 100 years, maybe give people an indication of how the last couple times we've seen these little spurts and fits and starts in the sector, it's not the same kind of bull market you're talking about. You're talking about a legitimate bull market that could last some time, but also filter down into the equities where people could have some of these kind of life altering returns.
Yeah, and it's all driven now by the fact that we have, again, gold breaking out against the 60/40 portfolio, breaking past a 10-year long base. Gold against the S&P, that's clearly made a secular turn, breaking out of a 4-year long base. So when you have those confirmations and those moves, that's when you've had really significant bull markets in precious metals. And so we didn't have that in recent years. And so now that we have those, more money is going to come from generalists into the sector, and that eventually spills over into the leveraged plays in the sector, meaning the juniors, smaller junior producers, silver stocks, silver in general, explorers. So you have more money coming in, you have a real bull market, you have a real appetite for people to speculate in the sector. And at the same time, you will see higher valuations. That also causes higher valuations. Valuations have been increasing a little bit, but they still have, I mean, they could, the gold stocks could double or go up 50% just based on valuations alone at this point. And again, if you look at what happened from 2001 to 2007 or the end of '08 to 2011, you look at some of the silver moves in those periods. You look at the moves in the '70s. Even you think about the gold stocks in the '60s. They had really good move from '64 to '68 or '62 to '68, from '76 to '80. So, and again, the moves in recent years, they did not happen while we had a confirmed breakout in gold against the 60/40 and gold against the stock market. So again, we get these breakouts, they confirm a new secular trend, and they signal that mainstream capital, normie capital, you could say, doesn't mean all of it's going to move into precious metals, but you get more of that into precious metals, that's spilling over into the sector. It's the larger sector, and that eventually spills over into the smaller areas. And look, it's going to be good for the entire sector, but as you talk about many times, you got to be a stock picker because yeah, the sector might go up 5x or 7x, but if you pick the right stocks, you can make 7x, 10x, or 15x. So people have to be very smart about stock picking. There's a huge variance in this sector with the performance of stocks and even the performance of juniors. I mean, I know that most juniors have not done well. The explorers are really struggling, considering the margins that the larger companies are putting out. But yes, and these things will improve because more money will come to the sector. But I would say rely more. It's something I've learned in doing this for 20 years is you really have to rely more on being a stock picker and finding value in these companies than necessarily just thinking, oh, I'm gold and silver are going to go way up. I'll just buy any gold or silver stock. They're going to do really well. That even that'll work to some degree in the times that are coming, but you still really want to be a stock picker and find the best companies, the best values, because those are the ones where you're really going to outperform a bull market, and that's what you want in a bull market. That's how you can make life-changing returns. Do your homework, find the leaders. Those stocks will be the biggest winners, and you will outperform the bull market itself.
Yeah, it's such an important point you're making because even if the whole sector gets a lift, you can have exponentially better returns by picking the right stocks. And obviously, you do that over at the Daily Gold. That's what you do for your subscribers. I know that you can't give away your secret sauce here. If people want to know the secret sauce and the stocks that Jordan invests in, they obviously need to subscribe. But just in a general sense, Any tips you could give people listening in as far as separating the wheat from the chaff?
Yeah, I would say the stocks that will do the best, it's all about which projects or which mines have the most economic value. And so when you see an explorer doing really well versus other explorers, it's because those projects, at least in the market's eyes, have the most economic value. Like they're going to be built, there's no permitting problems, or the company's going to be able to fund it, and it has the most economic value. I mean, there's tons of like if something's not performing well, there's tons of reasons why it's not performing well. They're not going to be able to permit it, or the company's too small. They need to be bought. Like, they're not going to be able to raise the funding, or maybe even though the project looks good on paper, like there's an issue that everybody knows about. For most projects, the grade is too low. And just going to producers and developers for a second, if you think about economic value, bigger projects produce more economic value in a bull market that gets leveraged. And that's why in the big money, the industry money is going to invest in those companies and want those projects versus just most other projects that they ignore. So that's another thing. You have to learn and understand, like, what is the big money in the industry buying versus what is it not buying. And yeah, I'll just throw in a pitch for myself. You should follow. I mean, you have to find a newsletter writer or subscribe to several where someone can really help you and give you the proper and correct guidance on a lot of these things. I mean, don't just try and do it alone. I mean, I have lots of sources that I talk to that I trust where I can, hey, is this legit, or is there a problem with this? And that stuff helps me a lot. So don't be afraid to ask for help and get help. I mean, you got to find a newsletter and someone you can trust. And based on what I'm saying, Shad, I've really rededicated myself in the last 12 or 18 months to focusing a lot more on companies. Before I still picked good stocks at various points before, but I was a little too much into okay, let me find something that'll go up the most with gold and silver. But after that, I really had an epiphany looking at many companies and just realizing if you find the best companies, or you analyze companies at current metals prices, and they're big enough, like those are the ones that are going to have the most leverage and where you can make huge gains, when metals prices rise versus other companies that if they don't have a lot to offer, like they're just going to struggle and you're just, hoping for more money to come in the bull market to save you. So I've really in the last 12 or 18 months, like I rededicated myself to focus a lot more on identifying the best companies. And so that's what I focus mostly on in my newsletter. Because by trade, I'm a technical analyst. I know all that stuff, but you're going to make the most money by stock picking in the bull market. You're not going to make the most money by trading or trying to buy bottoms or pick tops, like just day trading or swing trading. You're not going to make the most money that way. Again, you'll make the most money by buying the right companies. And at the same time, I have indicators. If stocks get really extended, you can sell a little bit. If the sector blows out to the upside, breadth indicators are at multi-year extremes, we're going to take a lot of profits at that point. But primarily, you have to focus on the company. People just waste way too much time trying to predict the macro and not enough time really trying to learn the companies.
Yeah, I think that's such a great point, and it's something for people listening in to consider. I think we'll wrap it up there for today on that point, that really it's about being in the right companies first and foremost. Sure, there's times to load up if it's a pullback. Sure, there's times to lighten up if things are getting a little bit frothy, but you'll make the most money being in the right companies. And for people that want to learn a little bit more about what Jordan does, definitely click on the link below this. Takes you over to the Daily Gold. Jordan, great to get you back on the KE Report. Don't be a stranger, man. We'll get you back on for an update soon. And as always, looking forward to our next conversation.
My pleasure. Thanks so much for having me.